Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Friday afternoon edition. Hope you all can hear me well. Perfect. Just made a bunch of movement and changed things here in the office for the studio. Anyway, as a quick housekeeping piece, this is going to be a shorter show today. I hurt myself yesterday at the dog park, slipped something in my back, and now I'm just sitting is painful. So we will hopefully get through the show in one piece without any too bad of grimaces. But some dog was roughhousing way too hard with my old German Shepherd and tried to pull him off and pop something. So hopefully it'll be better here soon. But man, back pain as you get old, some of you know, brutal. Anyway, let's go into our markets for today. I'm going to do a little bit of a Traders Week wrap up, and I wanted to kind of set a festive tone. It's totally been a week for me, Lisa. It's been a mess. I like this graphic. This actually is Grok. Normally I've been using Midjourney, but I've been playing with Grok's AI generation a little bit. And I like the up arrows because it really felt like everything was just up and positive for the week. Not everything, but most of the stuff we're going to look at. So I'll walk you through that. We'll talk about the upcoming Investors Day with JP Morgan. We'll talk about the tax bill, markets, and then, of course, I'll give you updates on the trades that I am in or, as the case may be, out of now because of what happened with market moves. So let's dive into the week wrap-up first. I wanted to bring up this S&P monthly here. And, you know, there's a mantra that we talk about so often that says, sell in May and go away, right? That's a common mantra you hear, and the belief is that from May on, markets just tank. Well, that's not true. Typically, they kind of go flat to slightly up, right? Just slightly up. And in that window of time, it's not May 1st. It's usually near the tail end, and we may be getting there. I brought up this weekly chart of this is a monthly chart of the S&P 500 with this just unbelievably large monthly candle for the month of April. And here we are just halfway through the month, and we are screaming to the upside. Momentum looking absolutely fantastic. Now, the question for me is where do I think this is going to stall out at? I think we have way too much optimism in our market right now. And I did mention on the show the other day that right as you get to about the 6,000 psychological level, that's probably going to be a little bit of a turning point here. And I know that some of you have cited that Bob Dunn as in saying that, the big market crashes happen after we make an all-time high. So I still am of the belief here that we are going to make an all-time high, but I do think things are going to start to get a little bit worse as we go on. As Sava pointed out here before the show started, you had Moody's downgrading U.S. credit rating from AA1 to AAA. It's still good, right? But it's a shot across the bow that ratings agencies aren't having it. All this uncertainty, all the stalemating politically we're getting, especially with the tax bill and other expenses and cost reductions. Moody's just said, enough, we're going to downgrade you. Now, the impact of this is rising rates. When you downgrade someone's debt, the yields typically have to go up because now they're not as creditworthy, or at least the perception is they're not as creditworthy. That would not be a good thing for our markets right now to see short-term treasuries start to move up, and that might actually bring even the longer-term yields up a little bit more as well. So not a good sign to have a downgrade from Moody's, but the market continues to move on. It's been absolutely fantastic, and I'll go through our top 10 or top 8 for the day and then move on. At the bottom, we had gold. Now, with gold, there's a lot to unpack here. I'm long term, obviously, if you go out a century, I'm going to be bullish on gold. However, the diamond market, some of you might recall, diamonds used to be super expensive, and that's by design. There's many stories on how De Beers and other companies have bought up all the diamonds and just keep them in a warehouse, shelve them, because they create scarcity. With gold, part of the perceived value is that this is a scarce commodity. It's not out of coal. I saw an article that talked about how scientists at CERN they can turn lead into gold. Now, lead's a much more common element, and just like you had diamonds, now all of a sudden went to cubic zirconias, and there's another moissanite, I think, is another one that's like a fake diamond, and you can take diamonds and coal and compress it down and make your own diamonds that way. So synthetic lab-grown diamonds have really brought down the prices of traditional diamonds, real diamonds out of the earth. Imagine what would happen if we started seeing factories putting out synthetic gold. I think that would have a pretty profound impact on the price of gold going forward. So, normally I would say I'm bullish long-term forever on gold because you can't make more of it. Now scientists can make more of it. So that kind of makes me a little bit pessimistic on gold here. And to go back to Margaret, is Margaret here today? Yes, you are. Good. Margaret's here. I'll break up the question that she asked me a couple days ago. Let me see if I can find it. I thought I had it all ready to go. Margaret asked me about an article. Let's see if I can bring up the question. And it was this one here. So here you go, Margaret. This is from, I forgot the name of the website here, the company that put this one out. But essentially, they're saying gold's the way to go. That gold has been going up in value against all these other assets, and from their perspective, going to keep on going. It says, this is against all odds research, and it says, gold is outperforming everything. Most think the trade is over. I think it's just getting started. When the trend is up, you buy. Okay, let's look at that chart. And I actually might be able to modify this in a little bit, but you notice here that this is gold versus the S&P 500. This is the classic risk on versus risk off. And this, I'm not quite sure how the reading of this is, but obviously the S&P from this peak here back in 2011, the S&P was doing fine, and gold was getting crushed against it. And now it looks like you've based on this ratio of gold versus the S&P. This looks like a cup and handle formation or an ascending triangle formation, and we've just recently broke that to the upside. In times of uncertainty, this against all odds research is correct. In times of uncertainty, this would most likely continue. Why? Because people are going to buy gold, which pushes this up, and people are also going to get out of the S&P, meaning they're going to look for risk-off assets. They're getting out of risk-on, which is the S&P, going to risk-off, which would be gold. So you're going to see a fundamental shift here of people leaving the S&P and buying gold, which does bolster his argument for more upside movement. Now, do we get back up to that 1.4 to 1 ratio of gold versus the S&P? I don't think so. I think there's actually headwinds and potential challenges here for gold going forward, especially if they can actually make synthetic gold. So if we strip that out, though, Margaret, if we strip that out and look at this picture by itself, this would tell you that you want to be long gold, right? Even though the trend still is making lower highs, it's stabilized and now it's showing some strength right at that line he's drawn. So I do like the analysis. He talks about this band squeeze. I'm not sure what ratio he's using or what calculation this is. It doesn't illustrate on here what that indicator that is. So unfortunately, I can't tell you what specific indicator this is and what the band squeeze is doing. And I don't have gold versus the S&P, unfortunately. So all in all, I think the analysis is correct. Gold should go much higher here, assuming that people get out of the S&P 500. And that's been my argument, is if we continue to have this uncertainty and all these tariffs, then yeah, people are going to start unloading those equities and start buying more commodities, physical stuff. I think that would do well for Bitcoin and for gold. Now, unfortunately, we have just incredible enthusiasm right now. You look at the S&P. I had that little yellow box drawn out yesterday. We had a spinning top a couple days ago, and we popped right above that. Nice movement. We retested a little bit today, but all in all, it looks great. This does feel to me like we're going towards all-time highs. It's just the nature of the beast when you look at that price action, that we're headed towards all-time highs. That downtrend, which we saw, scroll back here, really triple topping back in February, on February 19th, and then been selling off ever since. Well, we've now broken this pivot, which is 58.36 on S&P futures. You broke that pivot. It's absolutely logical that we would have a pullback here soon. We'll see how things go over the weekend. Ideally, I'd love to have a gap up, a significant gap up over the weekend so I could buy some puts directionally on the cheap, because I do think we're going to get a pullback and continue this uptrend. So just a pullback breather, and then the market continues on up and breaks that all-time high, which right now is at 61.66. This is ES Futures. This is the ES Futures. So yeah, I think that S&P is going to continue to move on up. If you look at gold, though, if that S&P continues to move up, where's gold going to go? Gold's going to drift lower. And, you got this level mapped out right around 3,000. To me, that's just the classic risk-off play. If people are building an appetite for risk, that money's going to flow into NASDAQ. That money's going to flow into the Russell. That money's going to flow into the S&P. Risk off, that money's going to flow into bonds, right? So that's going to cause demand for bonds, which drives the price of bonds higher and yields lower, technically. That's what it should do. And that'll bring them into gold as well. Pull them out of gold. So money leaves bonds. Money leaves gold and goes into the risk on assets. So it's just that, that old adage, Margaret, follow the money. Where's the money going to go? Well, clearly, if we look at the equity indexes, money's pouring into those, which means it's got to be coming out of other places. In that case, if it leaves the bond market, right, if people are selling their bonds, that drops the prices of bonds and yields go higher in that circumstance, right? So hopefully I answered that question. I do believe his analysis. I like his analysis. It's totally right on in my opinion. However, the market ebbs and flows. And again, if we continue to have these good stories, Trump said that he said the next couple of days he's going to have some tariff updates. Don't know if that's going to be good or bad. My assumption would be it's going to be something rather positive, but we never know. So there you go, Margaret. If you have want more detail, just type it in the chat, Margaret. Happy to go over it. Happy to dive deeper into this chart and let you know my thoughts on it. But yeah, the analysis is right. I think he should have called out that pattern. I know he's drawn those lines there, but I certainly would like to have him to called out that pattern because to me that's a pretty important one. We have some similar patterns in our equity markets today. Good to see you, Oliver. All right, back to the matter at hand, which was our top 8. Awesome, thank you, Margaret, and I appreciate you sending that to my X account or Twitter. Just apologize, it took me too many days to get to it. I should have done it right away. Okay, so from this perspective, it feels to me like gold's going to be going down right now. And that doesn't mean for all time. That just means for the next couple of weeks, I think you're probably going to see it drift lower and challenge 3,000. Now, technology has been really the receiver of great news. Now, here's where, remember, I always use that analogy of you open up the watch and it's got all the spinning cogs. If everything remains the way it is today with, some preferential treatment for technologies and maybe trade tariffs starting to dissipate, that opens the floodgates up to technology. However, how does that component of U.S. debt being downgraded impact us, right? That's one cog in that watch you got to figure out. So what do you guys think the impact of tech on tech stocks? What's the impact going to be for tech stocks like Amazon, Microsoft, or Magnificent Seven if we just get downgraded, which we did by Moody's? What would be your impact there for us? Absolutely, Okanola. TGIF, thank goodness. Really changed the whole talk of the show? You did. You changed the whole talk of the show. I'm happy to, man. I love it, Zava. I saw that headline. It's pretty good. Yeah, I'm on medication, so I don't drink and take meds. Otherwise, I would be toasting you guys, right? Why invest in tech stocks if bonds pay 5 or 6%? Money would be harder to borrow. Not necessarily that it's harder to borrow. Hello, Big Eb. Not necessarily that it's harder to borrow. It's more costly. Right? So let's say you're a tech firm and you're looking to expand your facilities and you could have borrowed money at 4.4%. Now it's going to be 4.8%. Just making up those numbers. No. Hey, doom and gloom is the fact that we got downgraded, right? Moody's the one precipitating down and gloom. You have to figure out what does that action do to our markets? And that should, in theory, raise the cost of capital, right? Exactly, Les says, most are cash rich, won't affect them too much. Well, they always like to have cash on hand. It doesn't matter whether they're making new acquisitions or whatnot, but they always seem to have cash on hand. So I think it will impact businesses overall. And maybe you're right. Maybe the big ones like your Amazon, Microsoft, and Meta, who have hundreds of millions if not billions, in cash, maybe some of the smaller ones might suffer. But the cost of doing business would start to rise if we got downgraded. And if Moody's did it, does Fitch follow suit? Does S&P follow suit? I'll tell you right now, President Trump's not too happy with the people over at Moody's for issuing that statement, right? How much does Starbucks have in cash? You can actually go to, you can actually find their fundamentals. I'm sure there's a bunch of different sites to get there, but I just historically have always used Yahoo. So let's see how much cash Starbucks has on hand. You mean to weather the strikes? Weather the strikes against old Starbucks? So to find out that stuff, you can just go to Yahoo Finance. You can type in the ticker symbol you're interested in, and then you go to statistics. And that should show you on the left-hand side here, cash on hand. Total cash, they've got $3 billion. All right? Can I email Bill about the downgrade? Trust me, I'm sure Bill knows. I mean, it just happened, so it's just recent. Like going into the weekend, they made that pretty big announcement. That was pretty good. Thought they were like a bank kind of with their balances. No, most of them want to have that moat. As Larry was talking about yesterday, one of his kind of 4 key things for Buffett investment philosophy is a company that has a moat, and a moat is enough cash on hand to survive through the bad times. What if interest rates fall? Will that not reduce the cost of capital? Yes, it will. Absolutely. And you want interest rates to fall. Like you and I as consumers across the board want interest rates to fall. If the short end of the yield curve starts to fall, the only area that it really hurts you is if you have money in a savings account. Because you're going to get less, but it doesn't matter. You should only have emergency funds in your saving account anyway, and everything else should be invested, getting a greater rate of return than the S&P 500. So, yes, in principle, if rates went down, the cost of capital is going to be cheaper. And ideally, when you look at something like that 10-year, which is, I haven't gotten to the 10-year yet. Here's your 10-year bond. This move up, which may not seem that dramatic in the grand scheme of things, right? We really feel like we've been chopping for a year and a half now. But that low point there, which was 3.85%, and we peaked out at 4.5%, that's 100 basis points. I mean, that's a full percentage point up in the yield on these. Where's that coming from? The higher this goes, the more your mortgages are rising. 30-year bond is what the 30-year fixed rate mortgage is based off of. So as that rises, so is the cost of housing. And if you keep raising this cost, it does price people out at some point because they can't get there. And Big F says, in my opinion, the downgrade is a big nothing. I would agree. I think it's more symbolic than having done any real damage. I still think you could downgrade it even another level and people are still going to buy treasuries. As long as you're paying that yield, it's the ability of the government to keep making payments. As long as they can keep printing money, probably a big nothing burger. But we'll see. You never know. These things can have a significant impact. But if I had to say on a spectrum of catastrophically bad news and nothing burger, I'd put us in that lower third of, well, it might have a little impact, but nothing really that's that dramatic. The Sophos' last downgrade was August 1st, 2023. So if you look at August 1st, 2023, that was back in here. So from August 2023, we had a pretty significant rally and then markets tanked. But still, the market was still rallying from that point. For Starbucks, does the cash on hand in the balance sheet include used gift card balances? No, I don't believe so. I don't believe so. I don't believe so. Not an accountant, not a CPA, so I wouldn't know that one. Sorry, Patel. We keep on moving up there. So technology, reaping the rewards. I was actually hoping we would have seen this sell off today. Unfortunately, most of my time was spent laying down in bed for my back, but which I'm going to head right after the show. Russell 2000 is the only one of our three market indexes that I look at that is still stuck at that overhead supply level. It has not closed above it. So not the greatest thing for the Russell here when you have your brother, NASDAQ 100 is already above that supply zone, and Big Daddy is well above that supply zone and heading towards the next one. There's your S&P dollar index, flat, 3 days of pretty much nothing. We did have a hammer formation form on Wednesday, but really got no follow through whatsoever. Crude oil, we saw two fairly decent days of sell-off from that $64 price. Nice little rally today of 0.57%, but for the week, right, you're looking at a bullish move up for the week on crude oil. And by the way, if you look at S&P, just look at the sheer number that we moved up, right? If you go from Friday's close to where we close at today, 5.24% move up in the S&P futures for the week. That's phenomenal. I do not expect that to be sustained at that trajectory for that much longer, especially since we've already been on this heated run for quite some time. Bitcoin, number 2 on the list. It's really had 3-4 days of nothing, right? Yeah, exactly, Sav, about 1% a day. That's pretty crazy from that low. You don't normally see that. Right now, that just tells me that people are just throwing caution to the wind and just gobbling it up. Whereas I don't think we're out of the tariff war yet, but certainly things are looking a bit better. And if we do get more positive impact from Trump over the weekend, we'll be at all-time highs in no time. You mentioned NASDAQ up 7% for the week. Let's go to that close right there. Let me make sure that that's right. I can't tell the colors on the candles. What color is that candle? It's red, so I have to go one little lower. Yeah, 6.83% is what I've got for the NASDAQ 100. Crazy. As far as Bitcoin goes, really nothing happened this week. It's probably the most boring one of the week. If you go back to where we were last Friday, which is right here at 103,635 to where we closed today, Bitcoin is only up 0.76%. Pretty weak. And your leader was the leader for the day, things are changing, was the 10-year. For the week, you have a fairly unchanged, just slightly up. 10-year bond for the week. So there you go. There's some of your big headline stuff. What did I have to talk about? So the big, beautiful tax bill. That's what I want to discuss next. This obviously is going to be faced with a lot of criticism from both sides of the aisle. Democrats are going to probably want to shoot it down because it has Trump's name on it, but also within the Republican Party, there are members who said, no, we're not voting for this unless you do this. And they play hardball because obviously their constituents voted them in for a specific set of reasons, and they, the platform that they're running on, and a lot of it's Medicaid, Social Security, things like that. So this big, beautiful bill that Trump calls it, he's already lashing out and calling names and insulting people because they haven't approved his big, beautiful bill yet. My guess is next week we'll probably have a clear understanding of what this bill looks like and be put to a vote, and we'll probably pass at some point. I haven't broken it down to see what all the exact specific tax benefits or savings would be. At least it says a big, beautiful flop. Well, when you've got Trump shouting, push it through, and basically calling people idiots if they don't vote for it, that would make me want to slow down. If someone's forcing you and saying, hey, just do it, just sign, don't read it. You don't need to read all those documents, just sign it. No, I think it's more important to say, let's pause. We're not under that big of a rush. He just, I know Trump would want to have this done so he could put that on his record and see what I did. But the fear is stuff gets through that shouldn't get through. So once this gets cleared and fixed, which will probably happen over the weekend and early next week, my guess is it'll get put to another vote, and then it'll move on to the floor. So that's that part. Another piece that I think we need to pay attention to, they voted on it today, didn't they? Yeah, they voted it down. It did not pass, which is why Trump was tweeting aggressively and calling people names and calling people stupid, as he likes to do. So AI, this is from Grok, by the way. Love it. That's a pretty spot-on picture of Jamie Dimon, right? The only big, beautiful bill is called... I like that, Chris. That's good. Big, beautiful bill. He's a little beautiful bill. He's not a big guy, but yeah, great guy. Investors Day is coming up. And the only reason I bring this up is Jamie Dimon does have a profound impact on the markets, and people like to hang on the words that he says. Typically, he's going to be rather optimistic. In traditional Jamie Dimon fashion, he's going to cite the uncertainty in the tariffs and the economy, as he should, and give some of his perspective on the impact that it might have for these markets going forward. Now, one thing that he's notorious for as well is attacking cryptocurrency and digital assets. We'll see how that goes. Right now, as I mentioned before, Jamie Dimon and JP Morgan are using cryptocurrency and digital assets. They have a blockchain called Connexus, which is a combination of Ethereum and Avalanche products, plus some other ones that are designed to move money around back and forth between financial firms only. You and I will not be a part of that one. So that is going to be on Monday. I think it's going to be exciting because he'll spot technologies and talk a lot about trends and where things are going. So I think it's good. Jamie Cramer. No. See, Jim Cramer was just he was like a talk show host that was a shock jock, right? He's like the Howard Stern of finance. He just says stuff and is over the top animations, and he's being influenced by his sponsors and by the people who are giving him perks. There's no way somebody knows that much about every company out there that exists on the fly. It's not going to happen. Let's see, Big Ed says, they could just not pass it, and everyone making under $95,000 will see their taxes go up by 25% next year, 12% up to 15%. True, but he's going to want to pass it. This is that feather in his cap, or one more feather in his cap would be passing it. He isn't always wrong, AK, Netflix, and Nike. Reminder, when Kramer had sound effects board, yeah. I've seen highlights of it. I don't watch his show. I refuse to watch his show. I think it's annoying, personally. And I think that every time, what happened when John O'Donnell, Eyal Shahar, and I think it was Sam Seiden went to New York, and they were on the CME, floor, and John called in to be one of the callers on his show, and they have a little script. Okay, this is John. Hey, booyah! You want to talk about your thing today? Totally scripted. So when you realize that it's scripted, I don't like scripted stuff. As you guys can tell from the amount of times I screw up. I'm not reading a teleprompter. I don't read a script. I don't have a script. I just have a couple graphics that keep me grounded as far as where I want to go. But yeah, Jim Cramer's show is fake callers. They're not going to take a live caller on national television like that. Can't be true. Sorry to burst your bubble, Daniel. Right? You know, when a caller calls into the show and they're like, hey, what do you think about XYZ company? And it's like it's this simple, cheap penny stock. He's like, oh, I love XYZ. And within 2 seconds, he's got full chart analysis, all the financials up on screen. That's all pre-done. He knows going in, okay, we're going to get a call on this topic here, so I know what to answer. I love when I get something. When I did the live radio, it was kind of weird. I would take live callers. And I'd have callers on the show, which was really fun because you're so on the clock. They actually had I think it was 3 or 5 second delay. So in case somebody dropped profanity, they could censor it out at the station. But I was on terrestrial radio for a while. I think we had 9 stations across the U.S. And people in their car would be listening in their car, which was kind of weird. Somebody called and I could actually hear they were driving, listening to me on the radio. Weird. Never ever aspired to be some radio celebrity. But here we are. Step up my game. I'm working on it. It's funny because I have a sound effects board that I was actually going to start to load up and start adding in sound effects for the show, but it's not high on my priority list. So if you guys have suggestions for that or anything, suggestions for the show, email me. Don't type it in the chat. Email me at tradermerlin@gmail.com and then I'll add stuff in. The sound effects part is funny. I'd like to do like a hallelujah stuff and just a few other fun ones. So now that we got that market out of the way, and I told you this is going to be a little bit of a shorter show, let me go into my final piece here. And you're driving right now, but you're not listening to me on the radio. You're through like YouTube, right? Your YouTube app or something. Because I don't think Spotify does live. Volume works well, loosen up the bad. Yeah, they gave me some pills, and I'm like, he's like, do you want something stronger? I'm like, no, I don't like taking drugs. I mean, nope. But they did give me some muscle relaxers, but it really hasn't done anything. But I'm gonna go lay down here in just a minute. All right, let me walk you through the end here just so I can kind of wrap up a little bit earlier than normal and go lay down for a minute. Apologize for that. But let's just talk about the end of the trading week. This was a decent week for me. So I had losses. My loss was SPY. So that was about $1,300 loss on this S&P. I'm now done with it. I'm out. And mainly that was done. Was it done on the spinning? I think it was done here on the spinning top. Don't remember exactly, but that SPY had shorted on the big gap up, and a couple of days when we paused, I really thought we were going to start to see some retracement and fill that gap, but we didn't get that. Yeah, Dr. Bonnie, I was trying to get a dog off of mine at the dog park. It's like an 80, 90-pound chocolate lab, and I tweaked my back pretty bad, so I'm going to go lay down for a while and relax. So this is the losing trade for the week. The other ones, they've all expired worthless. And I had the 380s of MicroStrategy. Those are expired. I had SMCI, which has another great rally today. There's your SMCI. That's right now at 45.75 in the after hours. And I'm out at 37. I'm out way down here. And I thought about rolling it. I was like, no, I just want to be out of SMCI. I'm done with it. We'll move on to something else. So unfortunately, I didn't catch this huge pop. But did okay selling premium for the past couple of months in this bad boy. So all in all, I'm happy the way that one turned out. What else? I had UNH. So UNH, I sold those 250 puts. I sold a lot of those actually, probably more than I wanted to. But ultimately, at the end of the week, I think I collected $355 per contract. So that was a pretty good one. And even when you have that loser like the S&P, when you have a whole bunch of other positions that are winners, like UNH was a winner, my SMCI was a big winner, my MicroStrategy was a big winner. I gave back $1,300 on that SPY, but I don't care. As long as the end of the week that number is much bigger than that loss, I'm okay. Big Ed said I sold my SMCI position at 35. Sorry, man. Sorry. It happens, The good news is you're still in NVIDIA and you're still in Palantir, right? Or did you sell out of your Palantir? Palantir is hesitating right now. You've had 3 consecutive days of indecision after a gigantic rally in Palantir, and that's coming off the heels of a pretty bad earnings announcement. The earnings announcement was off there, I remember. All right. What else? There was something else I wanted to discuss with you guys, and I just, for some reason, can't think about what that darn thing might be. No problem, Chad. So, Chad, you sent in this one the other day. Let me see if I can dive in. I apologize for not getting into it yesterday. I was just way too busy. He says, can you look at Walmart and Kroger? Well, they came out with earnings. Both of them did. So unfortunately, I'm too late for you, Chad. He says, look at Walmart and Kroger for possible dip buys. Note they both have good option liquidity. Kroger might be a good CPS and Walmart a decent bull call spread. So as far as the trajectory of Walmart right now, I'm really not convinced that there's any strong direction here. I would, from a swing trade perspective, my bias would be bullish just because that's what we've been having for the past month or so. And it looks to me like that optimism is going to continue to push these markets higher. So I kind of, even though Oliver is going to call me doom and gloom, and I do believe we're going to see a correction here, nothing major, but just a retracement in price, I can't ignore the trend is to the upside. And really, it's about this one right here, the S&P. The S&P is going to keep on moving up. Most likely, Walmart will as well. And as long as Walmart doesn't get hit too hard with those tariffs, by the way, they did say they're going to raise their prices too. Merlin, who's going to be at Cerritos tomorrow? I don't know. Is Trading Academy doing something at Cerritos? I have no idea, Daniel. I'm not privy to that stuff. So there you go. There's your chart. Sorry about that. That's what I get. Let's go back to KR. And there's Kroger. So Kroger looks great. Kroger looks like a buying opportunity. You got a beautiful uptrend going really since January 2020 or June of 2024. Higher highs, higher lows. Looks fantastic. No, Kroger's is a grocery store, grocery chain. We're not going to start cutting back on our groceries. We're all going to eat. And actually, if we do start to hit bad times financially, what happens a lot is the restaurant stocks suffer because more people are going to eat at home and make food at home. And that would benefit companies like Kroger. Walmart, obviously we all know who Walmart is, has a epic trend. But that trend really took a change here over the past, since the beginning of the year. I still am biased to the upside. I still think you're going to see this end up moving to the upside here on Walmart just because it is Walmart. And if Walmart can raise their prices just a little bit, I think they've only got like 4 or 5% profit margins, so they're not making a lot of money, but they make up for it in volume. If they now all of a sudden raise their prices a little bit to offset these tariffs, their numbers might start to look really, really good. So, Chad, I'm bullish on both of them, on Kroger and for Walmart. Kroger has a better technical picture. They can roll prices back, though. Yep. They'll jump them up here just a little bit. They said they would raise prices this week. Yep, that they did. Mike sent in a very interesting chart, and unfortunately I don't have the chart. Let me see if I can bring this one up for you. Bear with me as I try to bring this guy up. There it is. So Mike's comment here says, it looks to me like gold has reached a long-term top spanning 25 plus years. Would you agree that this is true? And the only logical position one should take is to go short for the next bunch of years and look at the bottom in the 40 to 50% area for upcoming years. Well, here's that chart that he sent me. And on a monthly, when you look at the futures contract here, it does look great, but I certainly would support your belief here that we're going to sell off. How long? Do we see a multi-year sell-off? I don't know if I think so. I don't believe that we'll see a multi-year unless they really do have this technology to turn lead into gold, a la Rumpelstiltskin. That would decimate gold's value. And maybe the U.S. government's right. Maybe some of the senators are right. Maybe we should sell our gold and move into Bitcoin because you can't make any more Bitcoin. But if you can make gold, that changes everything. If we were to draw a moving average on this one, to me, it looks like you're well above that moving average historically. So let me go back out to my trading platform here and we'll pull up. This is through TradeStation, but let's just use this gold futures contract that I have here and I'll show you on a monthly time frame. Oops. Monthly time frame. Come on. There's 1 month. And let's just, for giggles, throw on a simple moving average. Well, there's your 200, right? So we are so far above that 200 period moving average, it's scary. But let's do something a little bit more short term, right? Let's go with something like a 50 period moving average. That's the last 50 days. Notice that never in the history of this chart of gold have we seen a move that's that astronomical. Meaning it's so far away from this centerline band. And I mentioned this analogy before. If you take a rubber band and put it around your wrist, I can't even talk to that. That's how tired I am. You take a rubber band and put it around your wrist. If you pull that rubber band, let's say half an inch away, you're not that worried. It's like, whatever, no big deal. This would be the equivalent of that rubber band being pulled like 5 feet away from your arm. It's most likely going to snap back. And even though I'm bullish on gold, I love gold personally, I own gold personally, it does look like you're going to have a pullback. Now, does it fall all the way back down there? I don't think it's going to fall to that 50-period moving average. And by the time it got there, that would probably be maybe somewhere around that 2,300 level. Man, that'd be a pretty steep drop, 26%. It could certainly happen, right? It could certainly happen. But right now, I still think you have that gold as a flight to safety mentality. And until we get everything resolved, I don't think this is going to dip down. Now, what happened? This is a weekly chart. Actually, it's a monthly, Sava. Excuse me. This is a monthly chart. If you want it on a weekly, here is a weekly. Right? Even there, look how far away from the moving average we were. So the way Bollinger, this is the 50-period moving average. I was going to add Bollinger Bands on it, but at the doji would be good. Well, I just look back here. There's been no time where we've seen, even on a weekly chart, such a parabolic acceleration above that moving average. There's times where it's definitely moved above it. This one here looks to be like about 2 inches worth of space. We've really moved to the downside here back in 2013, away from that moving average. But this is the sharpest move up and away, and now it feels like it's correcting. So it would not surprise me to see this thing come back. 3,000 I've mapped out as a potential target once we broke the recent demand levels. But Mike, long term, if they cannot make gold out of lead, then gold's going to keep going up. If they can make a commodity out of a dirty, heavy, abundant commodity and make a scarce one, you can imagine everyone's going to be trying to make gold out of lead. Everybody going to make gold out of lead. Glad I added this week on my gold puts. Been a very slow moving. Yeah, good. Good for you, Saba. And let's see. I had one more question. This is Michael G. Michael G says, are we going back up to all-time highs? Do you think that the 200-day moving average on QQQ will be tested as a support one more time after this gap up? All right. Let's go back to the triple Qs. Let me change our moving average here to a 200-period moving average. And that was kind of your bounce point on this most recent sell-off. Or at least close to it. Michael, when we had Don on the program, I think Don was bullish and I was bearish at the time. I'm definitely more in the bullish camp now just because of the escalation or de-escalation of the tariff wars, I think has been pretty significant. So I don't know. I don't think we'll get back down here unless this heats back up and we see more uncertainty. Want a daily? There you go. I'll put it to a daily. That was a weekly I was looking at, but here's your daily. Let me get this line out of here. At this point, it looks like it's firing on all cylinders and optimism is there. I do think there was most likely going to be a correction, meaning a pullback and possibly even close that gap, but that short-term trend is just too strong, too bullish to the upside, and I'd be more biased to the upside here for sure. That's what I thought. I thought we'd come down and fill that gap, but, this thing's on fire right now. It's you just got to go with that trend. If you are long right now, it's particularly tech because of what's gone on with the Magnificent Seven, I certainly would be a bit more cautious because the more extended this becomes, the more, we see these big dramatic rallies, the more likely you're going to get a sharper pullback. Just the nature of price action. So there you go, Michael G. And I think that was it. I don't think I showed you guys these yesterday. I apologize. Larry wanted me to show them on the show. That's little young Larry Jacobson over there with the old whippersnapper Warren Buffett. Love it. He had another one too. There you go. Sitting in the high chairs. Sitting in the chairs getting some autographs. Where's the doom? I don't really see any. I have to shelve that doom feeling for now. Yeah, he would, trust me, he loves it. It's like one of the highlights of his life has been, meeting Warren Buffett. I thought it was, me, but no, Warren Buffett. That looks like it was definitely a few years ago. The number of calls in Magnificent Seven stocks are wild. Millions and millions spent on those long calls. No surprise. It's what's moving. And people that are in the know on those Magnificent in politics were leaking out information, I believe. So you have Tesla's been absolutely screaming. Today really wasn't the best day for Magnificent Seven stocks. The worst one in here, in my opinion, is Google, even though the chart's starting to look a little bit better from a kind of an upward sloping channel here. But NVIDIA, we know that's just a rock star. Microsoft, still very bullish on that one. Your you notice the price chart on it today, we came right back up to that 456 level yesterday. Little double tap there. So you get a lot of unfilled gaps. Meta had a red day. So did Apple. So Meta was down just a little bit, but look at that pattern. Hammer formation after a quick little sell-off. Unfortunately, tomorrow is Saturday. I mean, it's great for me, but tomorrow's Saturday, meaning markets aren't open. Let's go NFLX. I'm going to tell you your economic announcements for Monday and wrap up. Yeah, wow. 1,100, huh? Almost $1,200 for Netflix. This one I find mind-boggling because at a certain point, their subscriber growth is not going to continue to boom like it has, and it'll start to plateau. But where is that, right? You have so many different companies in the streaming media space, whether it's Hulu or Paramount or Disney Plus or Apple TV. I mean, there's so much competition in that space. Netflix keeps raising their prices. I'm just about to dump my Netflix just because I don't really watch that much TV. But there we go. Merlin, caught me right when I was on the line at DMV when you answered my questions. No problem, Mike. You can hope. DMV is more important, man. Get through the line with the sloth that's doing your work for you, and hopefully it all went well there at the DMV. All right, everybody, let me go and show you economic calendar for Monday. There's really not much happening on Monday, both from an economic perspective and from earnings. There's nothing on earnings, really. Here's your Monday schedule for the 19th. You do have several members of the FOMC speaking. That's Bostic, Williams, and Jefferson. Other than that, we just have the CB leading index, and that is it, my friends. Not a lot to speak of. So it'll probably be a quiet day unless Trump does some crazy tweet or new deal over the weekend. Maybe we get the big, beautiful bill passed. Who knows? They said they were going to work over the weekend, but I don't know if I buy that one. So that's it for me, everybody. I'm going to go take a break. My apologies for an early show today, but this old man needs it. Hope you had a great trading week. I hope you have an even better weekend. Go do something fun. Hopefully when I come back on Monday, I'll be all rested, refreshed, and back to normal. So that's it for me. Have a great weekend, everybody. Thank you. I'll see you on Monday.